going to move to, I hope this is audible enough. Thanks, Linda. I guess after unpacking that, Linda, there are three key themes, as you've indicated: quality, independence, and reporting. The purpose then is to unpack each one of those buckets and make sure that with these upcoming developments, what is the impact it's going to have? Are you, as the audit committee member, starting to get comfortable? And I think the good thing is some of these, the commentary is still out, or rather the discussion and consultative papers are still out, and you've got an opportunity. Like the reporting one is due end of November, so there is still a chance. But most of these issues, as Linda has indicated, are quite controversial globally. And maybe to start with, you know, Bernard has been going around the country on road shows, especially on the reporting side, as the RBA runs a specific project on the audit reporting. I think, Bernard, if you can start, give us a sense of what is coming out of your road shows in looking at the South African landscape.
Thank you, Cindy. Is that, can everybody hear? Thanks, Cindy, and thanks, Linda, for the presentation. The RBA, obviously, on the one hand, we, as the standard setter, it's important that we ensure that whatever goes into the audit report is technically correct. But on the other hand, we're also a regulator, and our main focus is on the public interest and what would protect the public best. And of course, the audit reporting project was initiated specifically because investors, audit committee members, those charged with governance have been saying that they're no longer interested in the binary audit report. The fact that you give a yes, no, fail, pass answer is not sufficient anymore. They want more information about the audit. So that is actually what initiated the whole project. And as an audit regulator, we also participate in international regulatory activities, and there is a forum where we discuss the auditing standards, and the audit report has been a topical issue for quite a few years now. And for the last couple of years, we've also invited investors and audit committee members to our meetings to ask them what their perception is of the audit report, and clearly they are not happy. So the new audit report, it has more information, and the question is whether the information is what audit committee members want, what investors want. There's additional information, but it might not necessarily be the right information. From the road shows that we've had, Cindy, I think what we've discovered is that audit committee members want something different. They're not really too much interested in information around the audit process, because remember, the key audit matters do not relate to issues that have been disclosed in the financial statements necessarily. Those issues are disclosed under matters of emphasis. There's also an other matters paragraph. And there seems to be a lot of confusion between what these key audit matters should be. When it comes back to the exposure draft, it actually refers to the audit process, and the question that audit committee members have is whether that additional information about the audit process is in fact helpful to them. I think what they would find useful is where the auditor uses professional judgment. The auditor rarely challenges the judgment applied by the directors, but if the auditor does disagree with management, they would be interested in that information. But they do not actually understand the technical issues about an audit. So our general view is that the information currently required under key audit matters about the audit process do not seem to be that interesting to the users and the readers of the financial statements. From the auditor side, because we tried to mix our audience to find out exactly whether the opinions would be the same, and we expected them to be different. From the auditor's perspective, it was interesting that clearly auditors are careful. They do not want to disclose too much on the audit, in the audit report about their audit, because there are areas where they apply professional judgment, and if they have to stand up in a court of law to explain how they got to their how they apply their professional judgment, it might expose the auditor to risk. So some of the audit firms have already explained to us that they will be taking out, that they'll be getting legal advice on what should go into key audit matters. And of course, our concern is that we do not want auditors to be so careful about the legal implications of the additional information that it loses the objective of disclosing the additional information. So on the one hand, we want them to use their professional judgment, but on the other hand, auditors will be careful about exactly what they put into that audit report. And they're already talking about how they're going to draft the wording so they can be protected. So that's really the general views, Cindy.
No, thanks, Bernard. I guess to flow from there, Louis, you come from business. And it's interesting to hear that the auditors are the ones that are a bit skeptical. But if I look at some of the examples that must be in the audit report as key audit matters, where the auditor must report around, say, the valuation, the goodwill issues, how does the client feel from a confidentiality point of view in terms of this matter is now going to be disclosed and be seen by other companies in their own space? What's your view around that?
Cindy, I think firstly it's rather intimidating to sit amongst all the professors, and then also to sit with my audit chair of an audit committee right at the top, so I need to be very cautious on what I say. But I think in some of the presentation and what Linda has said, and also Bernard has said, the issue of looking after the investors, looking after stakeholders, looking after public interest, I think sets the bar. That it is not about how do I feel about information, but what will give that comfort and to my investor. And I think taking the point a bit further, Cindy, is that, you know, I know we will touch on issues of IT governance later. I think if we look at the role of electronic e-commerce, integrity of data, how it can be influenced, etc., I think for me is a very good example how the goalposts are moving. In the past, you've been dependent and reliant on a lot of information that originated from different areas of the business in a particular way. That is not the case anymore, and that's why the emphasis needs to be shifted. So in my opinion, I think one will find many reasons as to why you should be selective in your wording, but I think that the real test is the test of what is in the interest of the investor and what is in the interest of the public, and that should set the standard of the information that needs to be disclosed. And then I think in the manner of combined insurance, all parties, whether it's business, auditors, and management, is going to have more responsibilities in this changing environment.
Sure. And the confusion around what is reportable, what will the key audit matters be, as you say, Bernard, that's what you've discovered. And I'm sure this will differ, Linda, from client or from entity to entity. Is there an expectation that, given this confusion, there's going to be better clarity when the report guidelines come up?
I guess that's always the difficulty, is what to report. And can you hear me? Is it on? Let me just, oh, I have switched it on.
It's better now.
And maybe I can just swap it around slightly. And one of my colleagues on the advisory group is from Business Europe, and they represent 1 million companies in Europe. And what he always says is, if the auditor wonders what to report, if you find him in the lift and you say, quickly give me the highlights of what's happened on this audit, what are the issues in this business, those are the types of things that ideally would be reported in key audit matters. I think the difficulty is, yes, how do you put that into words? I think if we're really intellectually honest with ourselves, we would know what those issues are in every company, and yes, they will be different from one company to the next. The difficulty comes in because auditors, for obvious and for real reasons, will be sensitive about their responsibility and about their liability. So what if I didn't report something and next year that is the cause of a really big thing in the business? And that maybe it links back to Louis' point, you know, the risk of self-interest taking over and not lifting your head and looking at public interest and what stakeholders want and what investors want. That is the thing that will start influencing the debate whether something's going to be reported or not. Having said that, I do think in the final version of the standard there's certainly room for improvement to better clarify that. But I think if we're honest, we would know what the two or three or five or however many things are as an auditor or as an audit committee what should be reported.
Sure. Tsakani, the public sector, I would say, has taken the lead already in this instance. Linda also touched on it. The audit report already highlights key matters. How do you see this aligned with what you are already doing and probably through the RBA? How has the consultation with the public sector and what you've done already been?
Thanks, indeed. I think if I can just maybe give a bit of context to our audit report. The Auditor General, being the Supreme Audit Office of the country, derives its role and mandate from the Constitution as well as the Public Audit Act. And the Public Audit Act requires of us specifically to audit and report in a manner that will enhance oversight, enable proper governance, and improve transparency in terms of how public funds are spent. And this is really done because our role is to build public confidence as part of our mandate of supporting democracy. So the Public Audit Act specifically requires of us to audit and report on three areas. One is the credibility of the financial report, which has been traditionally where the private sector auditors have stopped. Then we look at performance information, which really at the heart of it is an assessment of how that particular auditee has actually spent the public funds. Have they done it in a manner that's consistent with the contract entered into between that entity and citizens? And then the last thing is on compliance. We look at whether or not that entity has complied with key laws and regulations governing the country. Now, those are the three elements that are important to citizens, and we report on those because they are indeed in the public interest. So our audit report, which captures all three elements, starts with the opinion on the quality of the financials presented. This is now the fair presentation, and that's where we give an unmodified opinion if we think those financials are fairly presented. That's what we've all in the public domain coined unqualified audits. We then report on the other two elements, and if an entity or an auditee has got challenges on the quality or credibility of their performance information, they won't get a clean audit. If they have transgressed key laws and regulations, they won't get a clean audit. So if only they get the unqualified assessment in terms of the credibility of the financial information, as well as report reliably on their performance information and comply with key laws and regulations that we look at, then they get what we've termed a clean audit. So our audit report for a long time has long gone beyond the robot that Linda spoke about. It really captures the elements of what is in the public interest. And this obviously has a role for the auditor as well as the audit committee. Central to our work is also the engagements with stakeholders, and Linda spoke about that earlier on. To say that some of the developments internationally about private sector audits is to get auditors to interact much more meaningfully with key stakeholders. Central to our work is our ability to interact with the executive as well as those charged with governance and oversight. So, for example, we'll interact with Parliament, and we'll interact with Cabinet or the members of the executive responsible for that particular auditee. And we do that throughout the audit process, whether it's in the risk assessment process, in the auditing process, but also in the reporting phase. So we are definitely encouraged that the private sector seems to be catching up with the public sector in terms of wanting to report on matters that are in the public interest. we encourage that the auditing profession is wrestling with these issues, wrestling with how do we find the balance between our independence and obviously offering value and supporting auditees through the work that we do. So I think these improvements, if one looks at them, depending on where the debate on the content of the audit report goes, but these improvements will certainly enhance transparency, governance and accountability for the benefit of not just investors, but the broader range of funders, as well as the society at large.
Thanks, Sekani. Prof. Nkuhlu, more from an audit committee member, and also probably from an investor point of view, the expected improvement on the auditor's description of their responsibilities, because one of the requirements is that the auditor must now specifically define their responsibilities. Do you as an audit committee member feel this is going to enhance the quality and even improve the communication for you as the one charged with governance responsibility?
Well, no, thank you very much. Thank you very much. May I just also congratulate Nkonki on this initiative. I understand this is the third year for this annual audit committee conference is running. Congratulations. This is an exceptionally good initiative. We need to increase the pool of people who have got the knowledge and skills to serve on audit committees. This is very welcome. We're all concerned about governance in the country. I just want to say that congratulations on ACE as well, because again, it's going to be very, very important. We have the Institute of Directors, but really there isn't a comprehensive guide for audit committees as this is going to be presented. Coming to the matter that we're discussing, Chair, I think I'm going to be touching on your question as well. But I just want to say that as a preparer, as a member of the audit committee, we welcome steps that are being taken to enhance the value of an audit report, because it's very important to us, it's very important to the users out there. So we welcome that. We welcome also the focus on increasing transparency about what the auditors do and what comes out of that. Of course, regarding what is being proposed as key audit matters, we have got some questions. And really, we hope that this exposure period and the inputs by the various stakeholders are going to possibly deal with some of the concerns. As we all know, when you are a member of the audit committee, you discuss with the auditors the key audit matters. And in our case, towards the end of the year, during the third quarter, we usually just go through the list. We ask the CFO to come up with key matters that require special attention. And we normally, as audit committee, add to those. That's one issue. And now, to find that when we do that, they are going to end up being highlighted as key audit matters, we'll have to just be comfortable with that. The second issue, regarding major matters that we discuss during the year, we bring to the attention of the auditors, but in the end, we conclude that they're not material, and there's no need to refer to them anywhere, and to end up finding those now being highlighted as key audit matters. I mean, contingencies, for instance, things whether there's something that needs to be disclosed or not. In the mining sector, we have big debates about that. It could be provisions for mine closure, the levels of those, and then in the end we say the current levels are adequate. So we end up saying that there's no need for any changes to the accounts and there are no issues really. But there are matters like that you debate and come to the conclusion that material. So what is it going to happen now? Are the auditors, in their attempt to try and be transparent and also to reduce risk on themselves, have an increased list of matters that they will just list there, just to try and cover their backs. So these things worries us as to where this is going to end, because it may just now be another way of saying, instead of having the normal the short report, we're going to have an emphasis of matters type of report, to really convey this and get the stakeholders out there to understand that it does not necessarily convey that there's deterioration in controls. You know, so that message, what message is going to, how it's going to be read, is going to be understood by investors, is a matter that I believe that needs further investigation. Well, we welcome, personally I welcome the issue on independence. And because there have been major issues around independence of auditors. And my view is that auditors still are inclined to try and produce and do the analysis too finely in terms of the non-audit matters that they can do in actually getting those approvals, drawing the line there. Line can be very fine between a situation where you feel that they are really not just, you know, it's getting to management issues. They are just extending their, you know, the kind of thing that they can do to augment their own fees. So this is a matter, in my view, of independence that need further guidance, and actually reporting on independence and those issues and how exactly they check their own independence and dealing with these approval of these matters. It's a matter that really, in my view, is very important, and I welcome that, and as audit committee would welcome that, and we believe that to us it's unlikely to cause concerns, but what is likely to be of concern is just the risk of extending the list of key audit matters, and this becoming really, you know, losing its significance if the list is just going to grow and auditors trying to cover everything that they can think of.